So here, items or the accounts which are related to the not-for-profit organization is the next topic. Okay. So now, why do we need to know this difference between the revenue item and the capital item is so till now in receipt and payment account we have been entering both the capital and also the revenue items, right? But in the next topic, that is income and expenditure account, we are going to prepare the income and expenditure account in the next illustrations. So there we will be entering or recording only the revenue items in the income and expenditure account, and we will take up all the capital items to the balance sheet. For that, we must know the difference between the revenue and the capital items. Okay, so here there are certain examples given with the explanations actually whether it will come under the revenue or the capital item. So in that, the first one you have is the subscription. Okay, so what is subscription? Basically, um, for example, when you get newspaper, okay, so for a year you pay the amount, or sometimes monthly, quarterly, half yearly, or yearly. The person will collect some amount from you, and he will give that service to you for that particular period. Okay, it can be monthly, quarterly, half yearly, or yearly, that is annually. Okay, so here again, if you like go to any sports club also, there are certain subscriptions available. So 1 year if you go and subscribe for, and automatically you can go and play whenever you feel like. That's like a membership. Okay, so here these kind of membership fees are always categorized under the revenue receipts, because you have to renew it maybe after a year or month or half yearly or quarterly, you have to renew it, right? So that's why we call it as or we categorize under the revenue receipt column. Okay, the next comes in interest on investment. So basically, when you're making any investment, okay, say for example, you have savings of rupees 1 lakh, and you just want to invest it in the maybe any share or fund, mutual funds, or any bond, or even in your own account, bank account. Okay, so in that case, you get certain amount of interest from whatever you have invested. Those kind of investments or interest on investments will occur maybe any yearly ones, right? So automatically that comes under revenue receipt. So basically any receipt or payment which is made for a particular accounting period, then we call it revenue receipt or payment. Okay, then comes in sale of old sports material. Okay, so here we have to keenly watch whether it is old sports material or sports material alone. Okay, sometimes you will be given sale of sports material. In that case, we need to consider it as the capital. But now it is given as sale of old sports materials. In that case, we need to treat this as the revenue receipt. Okay, then comes in sale of old newspaper. Again, this one also sale of old newspaper. So whenever you see any word old, okay, immediately it should be revenue receipt or revenue payment. Okay, since we are making sale, we are receiving the amount, so we are writing it as revenue receipt. Then comes in the fifth one, life membership fee. Life, okay, which means you're paying only once in the lifetime of once in the lifetime. Okay, so you're paying the membership fee only once, then you become the member in that particular maybe institution, organization, or club. In that case, we call it capital receipt, because it is not going to occur again. It is non recurring in nature. Then the next one is legacy. Legacy means you are making a gift or giving a gift for any not organization, non-profit organization, out of your own wish. Nobody is compelling you, you are doing it out of your own wish. Okay, in that case it is considered as capital receipt. Okay, Then comes in admission fees or entrance fees. So we, as we all know, whenever we go get any admission in colleges, we pay the admission fee. Even in uh, some institutions also, they get admission fees, right, or the entrance fees. So those fees are paid only once for that organization or the institution. So when you have to get, say for an example, when you go in for any college admission, you will pay some amount called admission fees or entrance fees. Okay, so that is paid only once. And you pay your yearly fees, that's totally different, that will come under revenue. But admission fees is paid only once to get admission in that particular institution or organization. So which means you're paying it only once, so it comes under the capital receipt. Then grants from government and other organizations, which means if there is any we call, right, when we pay any donations, we get some what to say, tax reductions, all those things and all, right? So likewise, when anything is being done for any charity institutions and all, in that case, government will provide us certain reductions. Okay, so those deductions or reductions, in that case we call it as government grant. Okay, so here grants received towards like construction of building, acquisition of assets are treated as capital receipts, because that will be done only once. But if in that case the same building is to be maintained or any repairs and all has to be done, in that case we consider that as the revenue receipt, because that is recurring in nature. And if any payment is being made like salaries, wages and so on, that is also revenue receipts. Then the next topic is donations. So donations, any donation or any amount which is received by the not for profit organization as a gift. Okay, any amount, if no specifications are being given, no specific condition are given, in that case we call it general donation. And if anything is being specified, like you have to for example, in annual day function, you people receive certain awards, right, in name of some people, some person. Okay, so that person is giving donation for a specific event. Okay, maybe when a person gets first mark in the school, in that case that first mark student will get that endowment, like a prize, a donation. Okay, from a particular person, that is called specific donation. If something is being specified, that is a condition is being given, in that case we call it specific donation. Honorarium. Okay, honorarium means um, if any person comes in to attend any event. Okay, for example, it can be like any event, who is going to head, or who is the guest of honor. In that case we will pay certain amount to him as the like momentum or remembrance. Okay, in that case it is known as, he is not a regular employee of the organization obviously, so it will come under the revenue expenditure. Then comes in purchase of sports materials. So again here, when we are purchasing sports materials, okay, in that case these are to be shown in the um, balance sheet. Okay, so because we will get certain amount of opening stock, closing stock, anything is being amount of any sports material which is being consumed alone will be taken as revenue expenditure. The other things like unconsumed, that is closing stock of sports materials, will basically be taken into the balance sheet. So this is however we do it in the trading and P&L account. The same thing is to be followed for purchase of sports materials also. You will write the consumable, that is whatever we have consumed, whatever we have used in that particular year as the revenue expenditure, and whatever we have is unused or the closing stock will be treated as the closing stock and will be shown in the asset side of the balance sheet. Then purchase of sports equipments. Okay, materials is different. Like example here they have given, right, ball, bat, nets. These will be then and there we will change, we will buy every now and then, but not the equipments, right? So those kind of like table tennis table and billiards table are given as example here. So those tables and all will not be bought every now and then. Once it is being bought, that is it, right? So it's just an investment for a longer period. So it is categorized under the capital expenditure. And the last one is books for library. So once we buy the books, that is it, right? So again, we may buy a different books, not the same book, right? So automatically this also will come under the capital expenditure.